Well, another confirmed acquisition for Constellation Healthcare Technologies, the US-based provider of billing services to doctors there. It's the fourth acquisition since the company listed on AIM in December 2014. Well, Constellation has paid $28 million up front for MDRX medical billing, and this could rise to $30 million depending on MDRX's performance over the next 2 years. Well, to find out about the synergies, we're joined by the Chief Executive, Paul Palmer. So, Paul, you have a strict acquisition criteria of must generate recurring revenue while generating significant profitability. So what's the track record of this latest purchase?
So there were a couple of very interesting and synergetic opportunities with the current acquisition. If you look at the profile of the company, they are in areas that we haven't ventured out in, specifically large hospital-based consulting practice. They offer advice to large hospital systems on how to acquire sophisticated large physician groups. Having looked at our platform, which is predominantly large physician groups that are contracted or working for hospital systems, this consulting service is going to be a very beneficiary and very synergetic to Constellation, because we can go back to our existing platform and our existing clients. For instance, Baylor Health, one of the largest hospital systems in U.S., and tell them that we have this skill set. We can actually help you through how to manage large physician groups and how to benchmark them and what are the do's and don'ts of those processes. So that's the synergetic angle here, but we keep our strict discipline, which is, what is the accretive value to the shareholders on any of these acquisitions, and then what is the room for improvement, and can we, on a pro forma basis, see that this acquisition could be less than 3x, while we continue to trade at 10x, which then becomes a very accretive acquisition for the company and the shareholders.
So it's also interesting that you're incentivizing MDRX Medical by saying to them, look, there's an additional $2 million potentially if you outperform and do well for us. So what are the metrics that you're applying to that potential compensation sweetener?
So if they maintain their revenue and go above and beyond the revenue that we have purchased, if you look at the main value or the main asset we are purchasing in any one of these companies is the relationship with the physicians, which then translates to revenue for the company. So the incentive here and in all my acquisitions is basically to maintain the revenue, so we should not lose the revenue. And then if they go above and beyond that, if we have agreed, if we like this company at this revenue and we are willing to pay them this multiple, then if they increase that revenue, we should be willing to pay that multiple on the increased revenue as well. So the incentive is to go above and beyond in the first 12 months and then in the second 12 months, so for a total of 2 years. That also allows the current sellers to be engaged for the next 24 months keenly in the business, because there's a lot of money at the table for them as well.
Okay, well, 3 weeks ago, Constellation released some numbers that pointed to a 61% increase in EBITDA for 2015 at about $23 million and revenue to be around $76 million. That's an increase of 39%. So are you on track, as you've told me before, of possibly achieving a market capitalization of $250 million this year, because currently, today, you're at $188 million.
Right. So I would say at $188 million market cap, we are a very depressed value for the company. If you now consider the acquisition we have just completed, with $28 million, it puts us in line for $30+ million of EBITDA for 2016, which by normal means our value should be above $300 million. Now, if you once the research note from FinCap and Stifel comes out, I'm pretty sure they're going to put us north of these numbers, and hence a target for us should be £3 share, which should very easily put us north of $400 million valuation. So that is really what I think our true value is right now. So I don't blame the market right now. The markets are very jittery, and most of the stocks have fallen. Our stock has held pretty well. The value has held pretty well. But even at that number, I feel we are 50% discounted value. So it's a very, very good buy. I would buy this stock.
Okay, I'm very relieved to hear that, Paul. But this projected target, surely it's contingent on more acquisitions in this large, growing, defensive and fragmented market. Can you afford to pursue your aggressive acquisition strategy?
Yeah, I think our platform is pretty robust and scalable. We have perfected our processes. They are standardized and are delivering consistent results. We can handle large volumes. So I think our appetite to and our capability and capacity to do a lot more acquisitions in a shorter period of time and to be able to hold on and not commit any errors has increased tremendously. So you should see us growing at a rapid pace in this 12 months to 24-month time frame.
Okay, Paul. One final cheeky question. You did say there that you would buy shares at this current price. So are you buying shares, or do you intend to buy shares soon?
Well, I came into the market on this fundraise with $5+ million checks. So at £60, I was a buyer. I'm definitely a buyer at £50.
Paul Palmer, Chief Executive of Constellation Healthcare Technologies, thank you very much indeed for joining us.
Thank you very much, Sarah.